Good morning, everyone. Welcome to Windsor Brokers live daily market outlook. Today is Thursday, 22nd of November 2012, Thanksgiving Day, and congratulations and greetings to all of those that will be celebrating and having turkey. We are going, of course, here in the company to celebrate, as we have a few American citizens. Due to the holiday, we might expect some lower volumes, especially in the afternoon hours, as America will be shut for trading, so most likely some lower volumes and thinner markets are going to be seen in the afternoon. The initial pessimism that came 2 days ago on the failure to find a solution, basically to confirm the fresh tranche of aid for Greece, is now fading as renewed optimism on comments from Angela Merkel yesterday, saying that they have basically all the important elements, and most likely that a solution for Greece could be found on Monday's continuation of the meeting, brought the fresh optimism in the market and triggered the fresh risk appetite that pushed single currency again higher, following a brief dip 2 days ago that seriously shook the current positive tone. The reversal of 120 approximately 128.28 down to 127.35, though was short-lived, and the fresh strength posted so far highest level at 128.66, approaching our important levels at 128.75.85 and 129.00. Similar with the sterling that advanced to as high as 159.68, having an eye on 160 as a psychological and trend line, as well as Fibonacci barrier, while yen continues to weaken against the US dollar. Again, fresh low posted in the late hours yesterday at 82.63 with 83 in Forex, while dollar has lost ground against the Swiss franc following break below 94. That is was our break point, as well as 200 days moving average, and basically yesterday's close below this level now sees a more positive, pessimistic outlook for the pair, with the 93 to 40.93 levels seen on the downside as targets, while any corrective action as near-term studies reached oversold territory sees good barriers at 94, 94.30 that are likely going to cap. The crude oil steadies approximately at 87.60, following yesterday's dip to 86.16. A brief recovery so far entered the rather sideways mode, moving between 87.90 and 86.36. That was yesterday's spike low in the late hours after U.S. crude stocks have been released. A quick recovery sees still more potential towards the upside. Of course, more of this we're going to talk about in our technical part, as yellow metal also steadies above a recent low posted 2 days ago, yesterday at 17.20, and currently trading at approximately 17.29, still short of important barriers 17.35 and 17.38, but overall sentiment is still positive for gold, and still sees more potential towards the upside. As said, the euro advances against most of major currencies. Euros trading against Japanese yen has seen a fresh 7-month high posted at the beginning of day at 106.25, advancing higher after breaking above 104.57. That was the recent range top, and looking for a further extension higher that might be looking for a test of 107, and we have a quite good static barrier at 108.00, with the likely extension higher to probably try to fully retrace 111.42 to 97.31 descent. That could be a signal of the major reversal of the euro yen. We're going to take a look even on this instrument also during our technical part. Just now to see today's calendar. As said, America is shut for the holidays, but still a lot of data coming from Europe, with Chinese manufacturing PMI coming in at surprising 50.4 compared to the 49.5 in the month of October, and signaling that China's manufacturing sector shows the expansion accelerating in November for the first time in 13 months. As preliminary results for the factory survey showed, PMI rose to 13-month high of 50.4, as I said, and the latest indicator of recovery in the real economy after the data showing a solid credit growth with the firmer exports and the rising industrial output in the previous month, resulting in this figure that was released today. The uptick in economic activity indicator in October was followed by encouraging signs in September, and basically paved the way for stronger rebound in the world's second largest economy, as it's gathering momentum and entering the fourth quarter with the positive outlook. From France, that were the last releases at 8 o'clock GMT. Services PMI for November came at 46.1, much better than 44.6 in October, and the forecast at 45.3, as well as manufacturing PMI that came at 44.7 in November compared to 43.7 in October and 44.1 as forecasted, showing that also the Spanish economy is likely on the good track for regaining some more ground. In a couple of minutes, we're going to see the PMIs from Germany. Manufacturing PMI is forecasted slightly below the October's release at 46. Today's forecast 45.9, while services PMI is seen slightly higher, taking to 48.5 according to the forecast compared to 48.4. Eurozone manufacturing PMI is due at 9 o'clock GMT. 46.1, 45.6 manufacturing forecast compared to 45.4. Quite optimistic for the Eurozone, as well as services PMI at 46.1 versus 46 in September. UK industrial order expectations are due at 11 o'clock GMT. Minus 19 is forecast for today compared to the negative minus 23 in October. Slight improvement, if we can talk about improvement when we are talking about negative figures from Canada, as US is closed. Retail sales due at 1330, 0.6% seen in September compared to 0.3 in August, while core retail sales are also forecasted slightly higher at 0.5% compared to 0.4% in the month of August. And finally, Eurozone consumer confidence for October due at 1500 GMT is forecasted to stay unchanged at minus 26. And that would be all for today's calendar. As said, we might expect some lower volumes in the markets due to the holiday. There will be some early closing also today. You can check on either on Windsor's website or on your trading platform. It has been already sent to you, the holiday schedule. Any changes that are not expected, but in case of any changes, you will be informed. Some futures contracts will have, basically most of the future contracts will have early close today, with the Forex expected to run regular hours today and tomorrow. Basically, as the holiday falls on Thursday, it will be extended on Friday. So also today and tomorrow we will have early close in the number of markets. As far as I know, the only instrument that will be running, the only market that will be running will be FX. That will not be interrupted by the holidays. All the others will have some early closing due to the Thanksgiving Day holiday. From the markets, starting with the euro, as we can see, do you see the chart? Yes, you do. Fresh rally overnight hit 128.66 on approach to our upside targets, 128.75 peak of 7th of November and 128.85 lows of end of October, beginning of November, consolidative range floor seen as a break point for a possible stretch towards next psychological barrier and 50% retracement at 129.00, break of which is basically seen as a trigger for a stronger recovery of the down move, the latest down leg from 131.38 that dipped to 126.60 as daily studies are also gaining momentum and turning towards the positive territory. I would say on the larger outlook, more positive tone is seen for the pair. 4-hour structure is holding a positive tone. Brief consolidation here, and the corrective action is not ruled out as hourlies are just out of the overbought territory, with the dips so far being contained at 128.33. This is approximately a previous peak at 128.28. Ideally, the reversal here could be seen for a fresh extension higher, but further dips are not ruled out at this point, as the hourly studies are still pointing lower. And the Fibonacci levels to watch of the latest upleg from yesterday's low at 127.35 to 128.66. Basically the 23.6 Fibonacci retracement has so far contained the dips, reinforced by the ascending 20 days exponential moving average, with further extension lower, seeing 38.2% at 128.6, along with the 128.16, along with the 128.10 ascending 55 days exponential moving average, and the 128.00 is a round figure, and the 50% retracement support seen containing any deeper dips. Basically around 128, 128.15 is seen as ideal level in case of further extension lower. As said, the hourly studies are still slightly pointing lower and do not rule out corrective action, but so far the ground was found at 128.33, and a fresh extension higher as usually starts at the beginning of European session, and now sees again more potential towards the upside. As said, break above 128.66 focuses immediate barriers at 128.75 and 128.85 ahead of also significant 129.00, and this area is seen as a breakpoint for single currency to resume this near-term recovery of 126.60 low of 13th of November, and probably to look for further retracement of the down leg from 130.138 to 126.60. Next is cable. Fresh strength again seen on the beginning of European session, posts marginally fresh high at 159.71. Basically we are looking for test of 160.00 main bear trend line, and the 50% retracement as the pair cleared our initial Fibonacci barrier and previous lows at approximately 159.60, 159.59, 159.56 levels, with the resumption of the uptrend following a dip yesterday from 159.27 to 158.82. That was seen as corrective, and the fresh rally now sees focus at the upside at 160.00, and basically pardon, regain of this level, and also 160.41 peak of 7th of November, and 61.8% retracement seen as a confirmation of the bottom at 158.26, and the signal for a stronger recovery of the stronger corrective action of the down move from 163.08 peak of 21st of November down to 158.26, where basically the 200 days moving average so far contained the dips. Risk is seen on failure under 160 that might risk again the lower top and extension lower. Also we can see that there was one false break up to 161.74, and a quick reversal proved that the bears are still dominating on the larger picture. Now we're going to see how the things will be developing during today. Of course, not to expect more significant movements, especially during the afternoon hours, as America will be closed, but break above 160 is seen as the key action that finally might change the direction and signal a stronger recovery, basically to signal the end of the corrective action from 163.08. Of course, we need to see the break above 160, and probably to see regain of levels above 161 in order to confirm we have the 55 days moving average at 160.60, and from Fibonacci barriers. The pair just entered the cloud on the daily chart, and basically the cloud top is at 161.18. It's still a rather negative early signals of positive tone seen on the daily as the pair moves above the Tenkan Sen line, but Kijun-sen is still above at 160.00, reinforcing our 160 barrier, and the cloud top at 161.18. For our Ichimoku outlook is much more positive and bullish as the price is firmly above the cloud top, which is currently at 159.34, and above both moving averages, Tenkan and Kijun-sen, keeping the near-term outlook in the positive mode, as well as for our studies that are our reference indicator for the near-term structure are still positive, but approaching the overbought territory. That again might signal some hesitation on the approach to 160.00, our near-term break point. And dollar yen again remains the top performer among the major currencies as the fresh strength and the rally from overnight, from early hours of Europe posts fresh high at 82.73 against 82.63, the one posted at the beginning of Asian session, maintaining the firm bullish tone seen of 79.20, the higher low posted on 13th of November. Strong gains are now facing, looking for test of 83.00 as psychological barrier, as the pair cleared 82.20.25 previous highs and the 150 days weekly moving average. 83 and 83.30 are seen as the next upside targets. Overextended conditions seen on the 4-hour chart, where the indicators are well stretched and well above their limits, could be signal of some corrective, stronger corrective action. Yet we don't have any firm signal of correction to come. Just indication as the most of the indicators are deeply in the overbought territory, with the 82.35 seen as initial support. This is the overnight's higher platform, and then comes 82.00 as round figure support, and the previous tops at 81.58 and 81.45. Basically, any stronger recovery should hold in any case above 81. This is our higher platform of last week, and the only break below here would more significantly harm the near-term structure. Otherwise, bulls remain firmly in play, and current positive sentiment sees pair driven towards our initial target at 83.00, break of which to open 83.30, the next upside target. As I mentioned yesterday, a possibility of full retracement of 84.17 to 77.12 down leg from yearly peak of 11th of March 2012 down to low of 77.12 of 9th of September is now quite likely, as all elements are in favor of further strength of US dollar, as daily and weekly indicators are now into the positive territory, although overextended the conditions seen on the daily chart could be again a signal for some hesitation and probably slowing down of the speed in favor of some more significant corrective action on approach to 83 and 83.30, our initial upside targets. And the dollar Swiss lost ground after sliding and closing below 84.00. This is our key support, also 200 days moving average, seeing now more potential towards the downside, as currently the price tests descending 55 days moving average on the daily chart, 93.56 low seen so far, with immediate focus down at 93.27. That marks a 61.8% retracement of the larger rally from 92.13 to 95.11, and then 93.00 as round figure and psychological support. 4-hour indicators are deeply into the negative territory, yet showing space for some stronger extension lower, while previous strong support now acting as resistance. 94 and 94.30 is seen for now capping any stronger corrective action towards the upside, while only regain of 94.56 and 94.89 previous lower tops would harm the current downtrend from 95.11 and probably shift focus higher. For now, bears remain firmly in play, and building up of bearish momentum on the daily chart sees much more potential towards the downside, as set 93.27 and 93.00 seen as our next downside target. And then we have another important barrier, 92.75, higher low of 31st of October, seen on a break below 93.27 and 93.00. Of course, some corrective action could be seen, further corrective action, as the pair bounces off overnight low at 93.56 with the 93.84 seen so far, where descending 20 days exponential moving average so far limited the corrective action, with the set 94 and 94.30 expected to cap any more significant rallies on corrective rallies from 93.56 fresh low for dollar Swiss. Gonna take a look. Let's take a look on the euro yen. That is again quite significant. You're gonna have the update during the day for all relevant crosses in written, but let's take a look here on this. The daily, we don't see much. Basically, we have to go to the weekly chart. As the pair retraces, I would say now nearly 76.4% retracement. It's not written here, of the down leg from 111.42 to 94.10 on a break below the recent range top at 104.57. Extension so far seen to 106.38. This is around 7 months fresh high, with the positive sentiment and the strong bullish momentum of the single currency against the Japanese yen, keeping the upside firmly in focus. Overbought conditions on 4-hour chart are not yet producing any firm signal of reversal, but at the later stage in the near term we might expect some consolidative at least action preceding a fresh rally of the euro yen, with the previous barriers at 106 and 105 that are basically the round figure supports, and levels that are now acting as supports. 106 is the first one, 105, and then we have quite significant 104.57 and 104.00. Any dips should be contained above these levels in order to maintain the positive structure of 94.10, the uptrend of 94.10, 24th of July low. And now we're going to take a look at crude oil. As said, remains in the range, sideways movements following a dip to 86.16 2 days ago, with higher low, with the brief dip and spike down to 86.36 being short-lived. Basically, the hourly structure is neutral to positive at this point, while 4-hour indicators are still quite weak at this point, as the price is struggling to clear 20 days moving average, and basically both moving averages at this point are moving sideways. That sees still no firm signal of a possible stronger recovery, following upside rejection at 89.77, yes, at peak of 19th of November 2012, following a sharp fall, retracing a good part of the recent rally from 84.05 base up to 89.77. The upside so far remains out of reach, and the most likely scenario would be further ranging, as still no firm signals of solving any of the burning world problems, whether Eurozone or United States, with some, of course, positive signals coming from China's PMI, but from the other side, the negative tone is given. From the other side, the political situation and the current tension in Middle East still does not produce enough strength to push the oil more significantly higher. I would say any movement below 90.00 as let's say the recent the current range top and break point would be still seen as sideways movements. As we can see, the oil price is basically entrenched in past 1 month within 84 and the 90 range without clear direction yet, and the regain of 90.00 is set to confirm the recovery. Initially, the recovery was triggered by break above the diamond bottom, but did not produce enough strength to confirm the base at 84.00, and then basically to trigger a stronger recovery with the bearish crossover of 50 over 90 days moving average is still keeping the pressure at the downside. Break above 90 and 90.42, that marks 38.2% retracement, would be seen as would give some more optimistic tone into the near-term price action. However, larger bears of 100.72 that so far found support at 84 zone are still dominating in the larger picture, and as at break above 90.40 is to bring some more positive tone into the outlook for near-term outlook for the crude oil. And finally, gold is holding its positive tone, keeping steady as recovery reached 1732, just short of initial barrier at 1735, and more significant 1738. This is the previous high of 9th of November, as well as Fibonacci expansion 50%. That is acting as a quite strong barrier, and we might see basically if I expect to see some more consolidation below this level before the final push through. That will focus 1746 61.8 Fibonacci expansion and 1748 61.8% retracement. That are basically our near-term targets. On the downside, a higher low at 1719 posted yesterday offers good support and should not be exceeded in case of any reversal. Violation of this level, of course, to weaken the near-term structure and probably to turn focus again down towards very important 1705, 1700 zone, break of which would be bearish and would keep the upside levels out of reach. The daily structure is improving, regaining again bullish momentum, and sees more focus towards the upside. Of course, break above 1735.38 is required to confirm and resume towards our targets at 1746.48, and the later stage we have 1763 that marks 100%. 1771 that marks 100% Fibonacci expansion of the third wave of the recovery from 1672 low. That was all from my side. If you have any questions, please you can submit them now. Okay, thank you. Many thanks to all of you. Since no questions, we are going to be back tomorrow morning at the same time at 8 o'clock GMT. Thank you for being with us on a daily basis. I believe that we provide you quite good information for your trading. I wish you a nice day and a very good and successful trading. Good luck.